Hello traders at CMC Markets. Welcome to a new update by RRG Research for Monday the 30th of October, and I'm recording it on Friday the 27th in the morning. My name is Julius the Kempenaer and I am presenting to you from Amsterdam in the Netherlands. Crazy things are going on in the market, so let's dive right into it. First of all, the rotation of stock market indices in the world. Got the daily RRG on the right and the weekly on the left, and it's showing you the rotation of those various stock market indices around the MSCI world. And what you can see is that, especially on the daily RRG, there are a couple of moves going on. And I think the main takeaway from this picture is that the US market, so here you have got the Nasdaq, here's the New York FANG, here's the S&P 500, they are all moving into that lower left-hand direction, into that southwestern direction towards the lagging quadrant. That's a negative. On the other hand, we've got the CAC and the DAX in Europe to a degree moving at least up on the momentum scale, and here is the FTSE moving up on the momentum scale while inside weakening, and that's a positive thing. The only one that's the only outlier I think is the Dow Jones index. You see how that is moving into that top right hand corner, and here's the Nikkei index rolling over just before it's hitting the leading quadrant. If we bring that into the weekly chart, then we can see how the US indices, so New York FANG, Nasdaq, S&P, they're inside weakening, but they are starting to move to the left, so they're losing relative strength. That's what you see happening right here. You also see the Nikkei index, which is rolling over right here, starting to move to the left, and the Dow Jones index is really on a contrary direction because it's moving lower on the weekly scale. On the European side of things, we've got the DAX moving up here, we've got the CAC, although there's a little squibble right here, and we've got the stocks index moving to the right. FTSE obviously doing really nice, and here's the Hang Seng index. What we can learn from this is that, by the way, these are all on relative basis. So these are all relative moves versus the MSCI World Index. That doesn't necessarily mean that all these prices are going up or down in the direction of the tails. Certainly not. When we move to the RRG, that shows you all these indices against a 0% benchmark, all of a sudden making it an analysis of price trends, I think this chart speaks volumes. All these tails are moving into the lower left-hand corner, into the lagging quadrant. That means that all these price trends are now going down. They're all downtrends in price. So having established that, I think that's the main takeaway. So stock markets around the world going into downtrends, and a shift in relative terms out of the US into European markets. Probably the big picture we've got. Another thing that I noticed, and we don't talk about that a lot here on this update, but I do a lot of work on asset allocation. One of the relationships that I track is the relationship between stocks and bonds. And this chart shows you SPY versus IEF. So SPY, obviously the ETF that tracks the S&P 500. IEF is the ETF that tracks the 7 to 10 year bonds in the US. When the ratio moves up, stocks are outperforming bonds and vice versa. And what you can see here is that the better part of the year, this ratio moved up, indicating an outperformance for stocks over bonds. And then we started to move sideways. A couple of weeks ago, we had a tryout to break higher. That didn't work, it failed. And right now, we're rapidly breaking lower. And to me, that indicates that this ratio, this relationship has now changed. We should now have a preference for bonds over stocks. And it looks as if we have a completed top formation here coming out of that peak, which means that the upside is getting more difficult and the downside is wide open for a further correction. So for the weeks ahead, I believe that we should be positioned, or at least be aware of the fact that bonds are now starting to outperform stocks. When we move to the individual charts for a couple of these stock markets, let's start with the S&P 500. The break is very, very clear. We had this trend line building up here, and a couple of weeks ago when we put this low into place, this actually confirmed the strength of that trend line, because now we had 3 touch points, but that got broken last week, and now we're breaking below the previous low. So this chart is now definitely damaged and not in good shape, actually meaning with this break that the upside is now limited towards that 4200, 4220 area, and the downside is pretty wide open. I can see a little bit of support here around 4, but probably also around 3800. So these are quite some serious numbers in terms of downside potential. When you look at the RRG lines, you can see how that rolling over what we already saw on the RRG chart is now taking shape here. RS momentum is already almost crossing below 100, and RS ratio is following suit. So here's the NASDAQ, that's even more aggressive. You can see that break here. You can see how these RRG lines are pointing even more aggressively lower. And then here's the Dow Jones index. If you look at the still breaking support, it's still not the best of charts. But if you look at the RRG lines, you can see how they are pointing up. And that's what I wanted to point out, that the relative strength, in this case of the Dow Jones versus the S&P and the NASDAQ, is actually much stronger. Quickly look at the Nikkei index. You can see how that is coming out of that topping area. It's resting at a pretty important support area around 3,500. If that breaks, then it will very likely accelerate lower. And that is already indicated by the rolling over of the RRG lines. You can see that the RS momentum line is above 100 but rolling over, and the RS ratio line is shaving off that 100 area. That's what's positioning it inside the improving quadrant, rolling over without hitting the leading quadrant. And then here is the New York FANG index, and that's a very clear downside break out of that toppish pattern. We already had the break out of that trend channel. We're kind of holding up, but that support is now given way, and you can see how there is quite a bit of downside movement possible in the New York FANG index, while the upside is limited towards the 7,200 area. Now, when we compare those moves with some of the European ones, so here's the FTSE, and you can see how this did not break below its previous lows. Yeah, challenging some intermediate lows here, but the real support is around 7,200 in the FTSE. That's not broken yet, and you can see how that spills over into the RRG lines, which are slowing down and starting to pick up, indicating that there is relative strength getting into the FTSE index. Same thing for the stocks index. You can see how that is now resting at support. Obviously it's Friday, market's not open yet. But if this breaks, that would not be a good thing in the first place. But from a relative perspective, we're better off in the stocks than we are in the US. And you can see that playing out here with the RRG lines starting to move higher in the RS momentum scale, and RS ratio will follow through. And then one more chart that I want to show you is the DAX index, and you can see how that is resting at support. It would be better if it holds. If it doesn't, we're still better off in terms of relative strength, because you can see how RS momentum is already starting to move higher here. But another thing that I wanted to share with you is the RSI. You can see how the RSI index is not confirming the lows that we're making in the price chart. It's usually a pretty good thing, at least not necessarily for a turnaround, but definitely for a pause in the decline, which would sort of support the possibility for the DAX to hold up around this support level and potentially bounce higher off of that. Obviously, when we break that, then all bets are off. Now let's take a little bit of a deeper look into these FANG stocks. We do that every time that I present to you, and starting with the RRG, you can see the weekly on the left, daily on the right, and you can see that, especially on the daily chart, you can see that really strong split between Netflix and Microsoft and pretty much all others. Microsoft and Netflix are shooting off into the leading quadrant. All others are moving into the lagging quadrant. That's not a very good sign. Basically means that Microsoft and Netflix are now carrying that index. They're offsetting all the others. If we look at that on the weekly, then we definitely got confirmation from Microsoft. We see the tail of Microsoft, the weekly tail moving inside improving and at a strong heading. That's what's happening in the daily as well. And for Netflix, we see the tail moving into lagging, but sharply hooking up. And that's caused by that long, strong tail that we see on that daily. All the others are kind of confirming the weakness. Look at Nvidia, that's right here, so that's not very good. Amazon, look at that tail of Amazon, that long tail moving lower. We've got Amazon on the daily inside improving but rolling over. So imagine what happens when Amazon rolls over inside the improving quadrant and the daily starts to point lower again. What will happen to that weekly tail? Apple, Snowflake, AMD, kind of on the right side, but the dailies are not confirming that. So the question now is whether these weekly tails are strong enough to turn the dailies back around, or the other way around, vice versa, that the daily weakness is going to pull those weeklies around. I'm not going to wait for that. It's when it's conflicting, when it's confusing, it's probably better to stay away from that. So my main takeaway from this chart and the possible opportunities are for Microsoft and Netflix, and Amazon on the downside, because Amazon is really confirming what is going on. And the same for Nvidia. Nvidia is weakening on the weekly, and you can see a really nasty tail on the daily. So let's look at a few of those individual charts. Here's Netflix, big jump. This was a very bad chart, and then all of a sudden you get that jump higher. That makes it relatively attractive. It also gives it a lot of support on the downside. So this stock probably is not gonna shoot for the stars in this current weak environment, but it's very likely to hold up better than the others. That's what's making it an interesting stock to approach from the long side. And the same goes for Microsoft. If you look at Microsoft, you can see how the relative strength, how RRG lines are really doing very well. Price is also doing pretty well, but that, yesterday was a very weak move, a very strong down move. But from a relative perspective, Netflix and Microsoft are probably the two best choices that you can find inside the New York FANG index. Not necessarily for outright long positions, but they could be the longs in pair trades. And where can you offset it? Pretty much every other one. So here's Google, look at that. That's a serious break lower. Look at the relative strength. If you look at Meta, serious break lower, relative strength, so it's still holding above support, but the relative strength is really deteriorating. Here's Tesla, already broke with the gap a couple of weeks ago, but here is the relative strength really pointing lower. Here's Apple, obviously super important stock inside New York FANG, but in the markets in general, that's breaking lower, and you can see how relative strength is deteriorating. Here's Nvidia, that stock was super strong for a very long time, but I can now argue that we have a pretty big head and shoulders peak formation completed with the break, and if I just do a basic measurement, we go from, let's say, 410 to 500, that's $90. Projecting lower from 410, that gives me a little bit over 300 as a price target, which would immediately close the gap. So Nvidia really in bad shape, especially also when you look at the relative strength. And then here's Amazon, that long tail going lower. Look at that, this is a very serious break lower. In any case, the upside potential is very, very limited, while the downside risk is certainly there. And you can see how the RS momentum has started to roll over, and the RS ratio is probably not going to make it all the way back to 100. And that's why Amazon is inside improving and starting to roll over and heading back towards the lagging quadrant, basically confirming that long tail that we see on the weekly. And to wrap things up, let's have a quick look at what's happening in currencies. So here is the RRG for currencies. And what you can see here is the generic direction towards the lower left-hand corner. And that illustrates US dollar strength, because the US dollar is the center of the chart. And when everything moving to the lower left-hand corner, with the exception of Swissies and gold, that means that the US dollar is getting stronger and stronger. And we can better see that on the euro dollar chart, where we were already in that falling channel. Last week we had this nasty spike up and then all of a sudden move lower, but what it gives us is what is potentially a bear flag in a downtrend, and that's a continuation pattern, and it looks as if we're breaking from that flag right now. We just closed up here, but if you see US dollar trading around 105, the low 105, and I think we have a continuation signal on our hands pointing to lower prices for euro dollar, meaning US dollar strength. And we will also see that, or we are also seeing that in the dollar yen chart, where we are breaking out of that consolidation to the upside. And if I look at the chart here, then that's actually a pretty important level, because you can see how that was also a high back in October last year. Arguably, I prefer to have my resistance right here, where there is like the highs of 3 bars instead of that one single intraday spike. So nevertheless, it's a good sign for dollar yen, indicating more dollar strength coming our way. And cable is also confirming that view, where you can see how that downtrend is still in place. And we are breaking this little trend line lower. We're pushing against it. But when you see cable trading, let's say around 120.50, I think that's a pretty good indication that cable is on its way lower. Again, sending the message of stronger US dollar strength. I'm going to leave it at this and wrap up the show. Thank you for watching. I hope you enjoyed it. And I'm looking forward to seeing you again at a new update by RRG Research next week, same time, same place.